The EV revolution is upon us, and although Tesla has undoubtedly led the charge, Proterra has positioned itself to disrupt the commercial transportation industry. In this video, we look at Proterra the company, its financials, and determine whether or not Proterra stock is a good long-term investment. You can jump straight to the stock analysis and my year-end price target with the timestamps in the description below. Let's get started. Proterra is an American automotive and energy storage company that was founded in 2004 by founder and now chairman emeritus Dale Hill. Originally, Proterra produced compressed natural gas hybrid buses, but shifted focus to take advantage of federal EV incentives as part of the Clean Fuels Grant and TIGR programs. In 2014, Ryan Popple, former senior director of finance at Tesla, was named CEO of Proterra and shortly after received a $3 million grant from the California Energy Commissions to design and construct its battery electric transit bus manufacturing line. Over the course of 6 years, Popple helped lead the development of both this bus and the underlying battery powertrain. More recently, in March of 2020, CEO Ryan Popple was named as executive director of Proterra and replaced as CEO by Jack Allen, the chairman of the Proterra board and former CEO of Navistar International, one of the largest international trucking companies in the world. Today they are led by a diverse group of leadership, with considerable experience in truck manufacturing and EV vehicles, including Chief Operating Officer and President of Proterra Transit Josh Ensign, formerly VP of Manufacturing at Tesla, and Chief Technology Officer Dustin Grace, former powertrain engineer at, you guessed it, Tesla. Proterra is comprised of 3 business segments: Proterra Powered, Proterra Transit, and Proterra Energy. The Power division produces electric powertrain components for commercial EVs. This includes battery packs and electric motors and has grown at an impressive rate. Proterra partners with commercial vehicle manufacturers to implement their electric powertrains. This includes partnerships with Komatsu to power their electric excavator and with Daimler's Thomas-built buses to power their electric school buses. Proterra Transit manufactures the ZX5 bus, a fully electric public transit bus built in their Los Angeles manufacturing facility. The ZX5 comes in 2 models, a 35-foot bus that claims range of 240 miles and a larger 40-foot bus with max range of 329 miles. Proterra Energy provides services to assist public transit fleets in deploying on-premises charging and energy storage infrastructure. This includes assisting companies in modeling out the most cost-efficient EV bus and charging infrastructure setup for a given area. Proterra also provides services such as customer energy management and charging infrastructure maintenance. Although Proterra does not produce battery cells itself, they produce battery packs, major drivetrain components, and even composite vehicle bodies used on their ZX5 bus. They are vertically integrated in those key components. Recent deals with LG Chem will ensure its battery cell supply through at least 2023, with in-house development being researched as well. Proterra has a long-established history of producing battery powertrains and electric buses, with the latest ZX5 being the 5th generation in development. They also have favorable winds behind their back. Proterra is set to benefit greatly from upcoming federal legislation, most notably in the proposed infrastructure bill. Furthermore, Proterra has the right connections, with former board member Jennifer Granholm now acting as United States Secretary of Energy, and investments from the right places, with Daimler, BMW Group, and Generation Investments Management, an investment firm led by former Vice President Al Gore, all heavily invested. But is this company making money, and is the stock worth investing in? Proterra started trading as a public company in June of 2021 after agreeing to a SPAC deal with special purposed acquisition company ArcLight Clean Transportation Corp. In the first half of 2021, Proterra had net revenue of $112 million, an 18% year-on-year increase from 2020. The majority of revenue is from products sold, with $5 million coming by way of services offered. The company has yet to be profitable, with an adjusted EBITDA of negative $21 million in this most recent quarter. This is consistent with their previous 3 quarters. However, net losses increased significantly due to loss on valuation of derivative and warrant liabilities. As the stock price has fallen, Proterra has been forced to show the loss in value of their issued warrants. In a sense, this has deflated the total earnings of Proterra as they are not operational costs. That said, Proterra still operates under tight margins, even with these liabilities discounted, with gross profit coming in at $2.1 million for the first half of 2021, a decrease year-on-year of 50%. The majority of these expenses going to cost of goods sold. As of June 30th, Proterra holds $1 billion total assets, with cash-on-cash equivalents of $630 million. That is to say, Proterra has the liquidity to stay in business for the foreseeable future. If you're enjoying this video so far and would like to help the channel, consider liking and subscribing. Now let's get to the stock price. Proterra currently trades at a market cap of $2.1 billion and a price of $10 per share. Proterra has provided positive guidance moving forward. They believe they have the necessary assets to remain liquid without raising additional capital and believe they can hit $246 million in revenue for the full year of 2021. Proterra has issued a 2025 revenue target of $2.5 billion, representing a 39% compounding annual growth rate in their Proterra Transit business and a 114% CAGR in their powered and energy businesses. They believe in the next 4 years, they will be able to increase gross margins from 4 to 26% by significantly reducing the cost to produce batteries and buses. These are not unrealistic targets, as Proterra has solidified key battery supply contracts and has consistently expanded its customer base. The global EV market has huge potential, and Proterra has positioned itself well to capitalize on the opportunity. I believe Proterra is set up to succeed. Battery-powered vehicles are coming close to cost parity with internal combustion vehicles, and pro-EV legislation has gained considerable traction. To succeed, they will need to successfully scale up their manufacturing capabilities and cut down on expenses. Given the leadership they have in place and their experience in scaling up manufacturing at Tesla, Proterra can very well exceed the guidance provided. If we use Proterra's projected numbers as a base case and use an EBITDA multiple of 10x, consistent with what is used for most legacy automotive companies, we get a 2025 EBITDA of $500 million. At a 10% discount rate, we get a 1-year price target of $17. In a bull case, a more aggressive multiple due to early positioning in a quickly growing commercial EV space would give us a fair value 1-year price target of $25. That said, Proterra guidance shows EBITDA to be negative until flipping in 2023. Much like Tesla in its infancy, this could suppress stock price until Proterra is able to show consistent profitability. As such, Proterra should be viewed as a long-term investment that is still subject to many risks. I myself will be opening a small position in Proterra by selling covered puts at what I believe to be a currently deflated price. As always, please do your own research before opening any position. I'm not a financial advisor, and these are just my opinions. If you'd like me to cover a stock you're interested in, leave a comment below. If you're interested in watching future videos on investing in the stock, crypto, and real estate markets, consider subscribing. But most of all, thank you for your time, thank you for watching, and invest safe.